For 3 weeks, the Chinese government managed to hold off the storm. But today, it broke. Beijing was just congratulating itself on masterminding a rally when the stock market saw its biggest one-day fall in 8 years. This is the stuff of nightmares for a government which likes to be in control. Why today and why the scale of the rout? No one really knows. The only predictable thing about this market now is its unpredictability and the alarm it's spreading, not just in China, but around the world.
China is hugely important for the world economy. If things continue like this, the central bank in China will buy its own shares of the companies in the country. China cannot get weak because otherwise the entire world economy will have a problem and Greece will look like a children's birthday party in comparison.
Chinese stocks long ago lost touch with fundamentals. They more than doubled in the past year, despite the sluggish performance of many of the companies listed and a slowdown in the economy. The bubble burst in mid-June. Share prices fell 30% in the space of 3 weeks. Many called it a healthy correction, but the government called it an emergency, pumping money into the market and forcing big players to buy, not sell. Even today, some Shanghai investors are hoping their luck will turn again.
The markets dropped a lot not too long ago, and I was not especially anxious. I think the markets have reached their lows. There is not much space for further falls. That's my personal opinion. I think it will rebound back after dropping.
Everyone here is now holding their breath for what happens when trading opens tomorrow. The Chinese government has deep pockets, but even it must now ask itself what it has to throw at this market and for how long to stave off a full-scale crash. Carrie Gracie, BBC News, Beijing.